Yeah, again, thank you very much, Steve, for agreeing to meet with us and share some of your insight and expertise uh, in the field of internal auditing. We're in a master's course at Cal State San Bernardino, and the course is Internal Auditing. And throughout the course, we've learned basically the function of internal auditing uh, as described by the standards put out by the IIA as well as other governing bodies. And we covered some risk management, the COSO framework, and things such as that. So we would just like to uh, ask you a few questions here, uh, just about your experience in internal auditing, just kind of what you're doing now currently, and just some insight to the profession and what we can expect if we someday choose to go that route.
Okay.
All right. First, I would like you about your educational background. How should an internal auditor be educated? What qualities are you looking for in your people?
Well, as far as my background, I mean, I graduated from San Bernardino with an accounting background, bachelor's of science. Uh, After that, I obtained my CPA license. And then as far as for internal audit, there is a difference between internal audit and public accounting auditing or external auditing. So because of that, I did take an IIA class, Institute of Internal Auditing class. It was a 2-day class that it was an introduction to operational audit through advanced. It was about a 2 to 3 day training course that really kind of gives you an understanding of what an operational audit is in relation to an external audit that's usually performed by your public accounting firms. So by all means, it helps to have those two sides. One from the financial aspect, because it really gives you the foundation of controls and how to. Well, there's some of the more standard techniques like sampling, understand like the whole methodology behind auditing as far as why is it you do certain procedures and what assertions are you trying to cover. So that's kind of one foundation. But then on the other side, operational audit or internal auditing, it's kind of more about you're on the other side of the table. Now you're there trying to help the business. You're not just there dictating that these are the controls or these are the assertions that you have to adhere to be for financial statement reporting. It's more of like how can I help you as well. So definitely having a diverse that public accounting experience is definitely great as a foundation.
Okay. And this, you said it was a 2-day course put on by the IIA. Is that
Correct.
correct?
The 2-day course. And if the funny thing is, with the IIA, a lot of their training courses are a little bit more expensive than the Cal Society of CPA. As far as the cost per unit, there's a pretty significant difference. But yeah, it's by all means, they give them, I believe now they're giving them on the webcast, but it's nice to actually go there in an environment where you have other business organizations actually send their staff there to actually perform the training. And it's great because you can collaborate, see like what is it that you're doing over here at this company as opposed to what I'm doing, and how do you guys handle certain issues with management. And it works out really well because you're more of a team environment, learning environment.
Can these courses put on by the IIA lead to a certification, the CIA certification, if you chose to sit for that exam?
Yeah, they do have classes that they can provide to help you with getting certified as a CIA. As far as the certification, I do know that usually your CPA is key. It's key to have a CPA license, and if not, at least your certified internal auditor license as well. At least one of those two is probably what's the minimum that's required in the industry. Anything extra, like the certified fraud examiner, those help as well, because it kind of gives you more credentials. But again, it's not like it'll stop you in the long run. a lot of times just being exposed to auditing or for internal audit, you get exposed to those kind of fraudulent information, those kind of fraudulent experience. So from there, it's more something like, hey, I don't have my CFE, but I've been on these engagements where there was fraud and there was a fraud investigation that I was a part of. So, I mean, a certificate is great, but actual real life experience pretty much speaks for itself.
Absolutely. Absolutely. Okay. I'll leave it to my colleagues for the next question.
Okay. In what way does internal auditing add value to your company?
Well, when I was in charge of when I was part of the internal audit department before, the biggest area is because it was a smaller company. It had a lot smaller audit department, but at the same time, the resources between finance, sales, and marketing were also very scarce. Were smaller as well. So internal audit is great in which it can perform operational audits where, hey, like we have this problem where, let me give you a good example. One of my former employers, every time they bring a new market, they kind of agree to bring a new product out to the market. They have to determine what is the price we want to present this product out at the market. What's the price point? Because if you say you want to charge $3 for this product, if you want maybe like a 40% margin, gross profit margin off this product, but that price point is too high compared to your competitors or what you believe the public will pay for it. So that price point that you want to execute is not feasible. It's not going to work. So our marketing department was in charge of developing this price point, and a lot of the information that they would use from the sales team was never really challenged or questioned. So we would go out there, introduce a product to the market, and all of a sudden it's not selling. And because it's not selling, we have the grocery stores like the Vons, the Walmart, the Safeways coming back and telling us, hey, you know what? The product's not selling. Either you need to discount the price, or we're going to kick you off the shelf. So now what you're doing, now you're throwing out additional funds to lower like special coupons or special sales, and you lower the price. And then when you get your financial statement at the end of the month, all of a sudden this new product that you thought you were going to be making a 40% margin on, you're only making 10%. So of course senior management would have a problem with this. Like, all right, what happened? We thought we were going to get 40%, we're only making 10%, we're not making that much money on this product. We went through all this headache. What went wrong? And that's a perfect example where internal audit can be a big benefit to a company where maybe they don't have the in-depth knowledge to understand processes, or maybe at the same time, sometimes people are just so overwhelmed in what their job is every day to day, they can't really stop, step back and identify how can I improve my process so when I do present a new price point, it's more accurate. So this is a situation where I went in there, I interviewed everybody from the lower marketing people who kind of did a lot of the groundwork, the sales department who give the information, to the finance department who helps kind of gather the two sides and come up with this dollar amount, this price point. And we found out that pretty much a lot of the information from the sales team that's being provided wasn't really being challenged or confirmed as far as, hey, yes, it does make sense, and no, it doesn't make sense. They would kind of grab, they say, well, we're implementing this new product. This other product is kind of similar to it. Let's go ahead and just give that same, expectations of sales. You know, we're selling at 5,000 cases a month, so I'm pretty sure I can sell 5,000 cases of this other flavor. Right? And so stuff like that wasn't challenged. So that's the thing where you kind of present a letter back to management and say, hey, you know, we need to instill better process or better controls. So, you know, these types of things are identified. There are challenges. So when we do present a price to the customer and ultimately the consumer, it makes sense. We know that the profit margin we expect to make is what we're going to make.
All right, that's interesting. How does internal auditing help the organization manage risk?
Well, from risk, I mean, it's internal auditing. I mean, so the biggest thing with risk is that it's all around us. And with managing risk, it's a really cost benefit. External auditors auditors have the luxury of where they go in there and pretty much the audit standards are what the audit standards are. They have to comply to it. So really, there's very much negotiation on the audit team as far as the amount of work that's going to be performed. There's a lot of governance around that. With internal auditing, it's different. You can review a certain process, identify all these risks, and identify these controls to help mitigate the risks. But if the cost of those controls is so substantial, that's where internal audit can really provide the biggest benefit. To identify, all right, how slim can these controls be, or better yet, identify what is the key control that we can have. Just that here's this process, and we have all these detective controls where everybody's checking somebody's work. This person's checking that one's work, and this person's kind of supervising these other two people. So instead of having all these controls that are more detective controls, what about a preventive control? Something in the top level that'll prevent somebody from entering something by mistake, an error. If it's supposed to be an entry within a certain dollar amount threshold, and you set some kind of controls over that, I mean, then that'll kind of help prevent. Then you really don't have to have so many people checking what the actual numbers are at the bottom. So again, detective controls are the biggest area where internal auditors can help implement that. And usually the cost of those is a lot more beneficial than detective controls. Or I'm sorry, preventive controls is cheaper than detective controls usually.
Okay.
Yeah, I see. Since our project is about Mars, the company, you have before I start my question, do you have just an example how the internal control at Mars specifically helped in mitigating the risk? Do you have anything in mind right now?
Well, I mean that would be a good example. We have an application called Open Pages that we use to kind of document all of our controls throughout the whole company, throughout all of our business units. But with that, the biggest part of that is identifying which controls are manual, which ones are automated, which ones are detective, which ones are preventive. So as far as the specific example, I can't go into too much specific, but because I'm not part of the internal audit, I was more originally the internal control functional expert here for North America. But I guess you could say, a good example would be the controls we have over our trade. I'm not sure how familiar you guys are with trade. Trade are the discounts that we give to our customers, like again, the bonds, Safeway, Walmart, and these discounts, it's usually managed by a third-party application software. And so one of the things that we identified is that we have a lot of people on the back end, again, verifying what's being entered, and we found that there's a lot of errors as far as were we giving the right amount of money to each individual, because based on budget, certain customers should receive more money as opposed to Walmart. The amount of volume that goes through Walmart is significantly more than say like a Stater Brothers, just because of the difference in Stater Brothers is more California, Walmart is pretty much international now. So of course you would expect to give more money to Walmart. But we had a process before where we had 4 individuals who kind of be reviewing what's being entered in the system and making sure things are balanced, things were right. But at the same time they were spending a lot of time fixing errors that were created by the people who entered this information in the software. So it goes back to number 1, identifying that our people entering the information have to be better trained on how to use the application, as well as we need to implement better controls at the top end, so we don't have to have the other 4 or 5 people double checking what was already entered.
Okay, clear. Good. Now, as far as my question is, what is your approach to performing an assurance engagement, and how closely do you follow the IIA model? Your approach of performing an insurance engagement. I understand that maybe you were not involved with Mars, but I think it's usually some sort of, is it usually standard approaches?
You know what? The IIA, from my experience with the IIA standards, they're not as they're very similar to the AICPA. The one great thing about the AICPA is that